Welcome to Stephen Johnson Stocks, everybody. This is a special episode because today we're rewarding laziness. So, I want you to comment below how much of a lazy trader you are, and I'm going to judge based on your laziness how lazy you actually are. And we're going to give some awards. Third place laziness will get fucking screw, because you're a bit of a tool. Second place of laziness is going to get some hand-delivered Stephen Johnson lubrication, so you can put it up your bum and be an asshole. And the laziest person is going to get a special Bratislavia shot. So I'm going to give you a shot of shut the fuck up, baby. Just kidding, welcome to Stephen Johnson Stocks, the channel for fucking doers. I'm a doer, in case you didn't know. I'm going to buy some new clothes definitely today, I'm going to the mall. But just getting to it, made really funny time, like made a 80 on a plane out of Europe, 60 on the plane back, and 100 in a bar drunk. And these were my 3 day trades, and I'm working on strategies to more PDT friendly strategies. They're in the Excel, you can buy it. I'm on the challenge. I've learned through Tim Sykes. There's an affiliate link if you want to try and be profitable with him too. But let's quickly get in some comments. So yeah, I'm up maybe 700-ish. You'll see on the next slide. Let's get some comments. Let's see. Chris Waits, good on you. Reckon you'll be trading full time soon? Yeah, I think so. And in the next. Somewhere in 2018, I think I will be. I want to make 750-ish this month, 1,500 next month, 3 grand the month after, and then I'm on track. Rudy, hey, are you still selling the spreadsheet? Yep. Click the PayPal link in the description, and you can buy it. Not for long. This is the last week. I'm selling it at $75. Gabriela Manta, how many hours do you dedicate to the stock market? I'd say pretty much my entire life. Every now and then, like I'll go out. Like yesterday, I went out, but I'll take my laptop. But it's not dedicating to the stock market, because you can trade 9:30 till 9:45 and make $500,000. I see people do it. It's more dedicating time to learn, and for that you've got to be round the clock all the time, especially in your first year. Trades. What's up, guys? Okay. Same as always. Winning percentage. I always go off this out because. And I always say this: if you winning more than 50% and you let your winners run more than your losers, then you have to be profitable. There's no other way. So I always stick with winning percentage, and it's good that I'm up winning 63% of the time, roughly. My account is up 5%, up $663 after having making about 240 this week. I really wanted to size up. But it's a little bit scary, so I've been looking at ways of getting around the PDT. I'll get into that in a little bit. But yeah, I mean, it would be nice to get over 700. Then me profitable month has been bigger than any of me losing months, and already apart from this one exception, it's kind of almost double any month that I've lost. So definitely regaining what I've lost and doing it quite quickly. Winning kind of 5 times what I'd made the month before. So I think I'd like to close the month out at about 750 profit, and then next month go for 1,500, and then just keep doubling profit until I'm ideally making a few thousand, $3,000, $4,000, $5,000 a month. That's where I would like to be. But let's see if we get there. I need to get over this stupid PDD, because I made 3 green trades. Like, you'll see them come out. And I'm thinking, how can I get round PDT? Especially after I had a chat with Roland on the Steady Trade podcast. And he was saying his strategy was just buying gap ups. He was buying gap ups the next day so he could save his day trades. And that led me to start thinking, I've been tracking these gapping craps. Stocks that gap up with bad long-term charts. And just always, and then some of them break out and run, like these ones, which have had green days 8%, 14%, 7%, 13% on these dates. But the majority of them go down when they gap up. And
I was thinking, well, what did they do on day two? Because I'm always taking profits, and you know the old mantra: you never went broke by taking profits, but you also never got rich by not having many trades. So I started tracking. Well, what did they do on day two, and what did they do on day three? And I mean, on average, out of these 30 stocks, on average, the stock that gaps up comes down about 18.28%. 18.28%. But on day two, it actually continues. So from the open of when it gapped up, it actually finishes 24.9% after the second day, and on average 27% on the third day. And taking into account the ones that go green as well, they generally spike about on average 17%, but that's some of them stay green out. The ones that go red, the average spike is about 7%. So I know to short into about a 7% spike. And I'm doing this for, I'm building it. So I'm building this for shorting into key resistance and first gap down day. And this is for sale for the last week only. It's funny, I feel like a little salesperson. It's for sale for the last week only for $75 because this week. And then I'm going to push it up to 100, 125 maybe. For some reasons, one reason, too many people are buying it and I don't really want to give it away too much. So when something's in limited supply, like a stock, and a lot of people want it, the price goes up, and chasers chase at the end and lose, so don't be a chaser. Two, I'm adding a lot more to it, adding a lot more data and details to it to make it better. And three, I'm making much more money, so I think it validates more that what I'm doing is correct. But let's get into the trades. If you want the Excel, there's a PayPal.me link in the description. You can buy it there. Appreciate you guys who bought it so far. Much more take in it that I ever expected. I didn't expect so many people to want it. So really cool for me. It's cool to monetize YouTube a bit. And let's get into the trades. I'll see you later. I think in general October has been okay. It's not been as crazy as maybe September. So on some days you don't find the ideal trade that you want. This is a beautiful gap and crop again on the Excel. I'm sick of saying this. But when it was popping back up, you could feel that the last time it got up to the 15s on volume, 33 million shares, it really rejected hard. So it's safe to assume that if it popped up here again, it would probably reject quite hard again. So it's kind of a short and overhead resistance, not ideal. But I knew that people would not want to invest. You've got to think what the buyers think, what the sellers think. And when the stock is up here, buyers are probably thinking, well, I don't really want to buy. It's because it's got resistance up into the 15, 16, so, and it rejected hard. But there's still a couple of dollars on it. But it's not ideal, but I still think the bias is generally on the short side. But so when it spiked, it had this hard rejection here, and then it didn't bounce. And when it didn't bounce, I got in short on the 1280s. I think on this one I was adding into a win. I was adding a little bit. I was on the plane. On this trade I was on the plane to Slovakia and Vienna, and the next trade I was not on the plane. I was on the plane again back, and then on the final trade, the third one that you'll see, I was drunk in the pub. So you can trade from anywhere, twice on a plane and once in a pub. But I was shorting in the 1280s. I was covering in the 1240s, 1230s. So I nicely hit the bottom. And then it popped up. And when you see this consolidation near a breakout zone, and then especially when it pops and then comes back down and hits the breakout again and double bottoms on this consolidation, it's a very strong sign it's going to push. And it pushed up to the 14s, but like having that overhead resistance, it ended up coming back down. So for me, it's kind of following the trend, and because it's nice to draw lines, like this is a really nice breakout. The consolidation, the dip, it holds the consolidation, pushes up. This is a double top. Big sign of weakness. I'm just following the trend down here until it breaks. And then as soon as it comes out of the trend, I would be long biased if any. Well, when it's consolidating and not dipping back down for a double bottom. If it double bottoms, that's quite a strong sign. If it came back down here, bottomed, that's a strong sign, but it can still crack. But if it pops and consolidates, that's a really strong sign. Shorts want to be getting out. And this is probably shorts covering. This could be longs and shorts covering, but it's probably just squeezing if anything. And yeah, nothing else to say about this one. Yeah, it's kind of funny just going over the stocks. This is the second gap and crap of the week that I've traded. So if we go to the 2 month chart, it's very similar to Tucker, which you'll see next. So it was in the tens, it gapped down to the eights, it gapped back up, filled the gap again, and it's just the gap and crap setup that's on the Excel sheet that I trade when it gaps up to the nines on relatively insignificant news. It's some patient data results, nothing significant. Uh, One sec, let's just go back 5 days. I mean, here's the gap up here. Everyone finds out about the news. Then this is an especially, and when I see it going failing pre-market, that's often a good sign that it can't even hold its pre-market highs on the news. So that's super weak for me. So I actually missed this because I was on a plane and I was flying back from a trip to Slovakia and Budapest and in Vienna, and so I missed this spike, and then it failed, came down, popped back up, perfect double top, almost a triple top here. Major signs of weakness, and I saw it when it cracked here, and I kind of chased it in, and I wrote it from the 940s. I was short in the 940s, covered some in the 890s, and then when it made this kind of double bottom and it was coiling up, I just took the rest off on 920. Good decision because it ultimately ran to the 970s. So, but had I've held it like I've been watching on the Excel strategy, it went as low as the 820. So I could have took it from, even though I was late, from the 950s to the 820s, taking a good 10, 12, 14%. And yeah, it's just following the Excel pattern. And this is Taka, and I mean it's very basic. The stock was in the 17s, it's now in the 10s. It's gapped up on news of. Let me bring it up for you guys. Doo, doo, doo. Uh, Tokagen presents updated durable complete response data from phase 1 trial. All responders now complete response after 3-year follow-up. So it's basically just saying like they've done a test and he has the results. So it's not like anything amazing. So, and if we look at the sector, it is like a biotech, or say it's drug manufacturer. So it's like a biotech, I think. But it's from the 17s down to the 12s. It's got a lot of resistance in the 12s. So naturally, ignore this typo, it's just an error, but naturally, when it's gapping up to the 12s on meaningless news, it's probably going to come back down. Now, I didn't think it was going to come this much down. So I saw it popping up. It like literally, I've got a screener, a pre-market screener. One sec. Do. Where's the run button gone? I've lost it. Ah, one sec. Where's my screener? Ah, there you go. So I've got my pre-market screener. I just click run. It's showing different results, but basically it just pops up here. And my pre-market screener is like just stocks above 25 cents, less than 20, up 10% on the day, or over 100,000 in volume on stocks to trade. And it popped up like 2 minutes before the market opened, and I immediately sort of shit. So I was like short into the 12s pre-market, shorted a little bit more into the spike, maybe in the 1240s. And then I was covering in the 1190s. Like I took like 50, 60 cents on it, but it's because I was in the pub and I was drunk. So I didn't want to like risk anything. But had I been at home and concentrating, I've often started adding into winners. So adding into a winner, this is like a $5, $6, $7, $1,000 trade coming in down here. And it's also a nice dip buy when it pulls this high, when it bottoms and consolidates. It's a nice dip buy right from the 8s to the 10s.
Tú eres el imán y yo soy el metal. Pero el plan.